and welcome to our studio of Future of Money interviews. We bring in industry experts, peers, we bring in partners, folks who invest in the industry for all kinds of conversations about traditional industry trends, crypto trends, and everything in between. So it's my pleasure to have Austin in studio today, our guest, Austin Cornell. He's with ZeroHash, and ZeroHash is one of those oldest, most respected companies in the industry, been around quite some time. And you guys provide crypto as a service platform to your clients. And I'm delighted that our technical teams and business teams are in conversations on potential collaboration and partnerships. And therefore, I am very pleased that we're talking as well today with Austin in our studio. So welcome to Future of Money. Introduce yourself, introduce the company, and let's talk everything payments today.
Thanks, Elena. Great to be here. So I'm Austin on the ZeroHash revenue team. I've been working in crypto for a few years, going back to when I helped start the crypto team at Plaid. And Plaid was an open banking company that started a crypto go-to-market function. And from there, I developed a deep passion for crypto. And not just Bitcoin and Ethereum and crypto assets, but more importantly, crypto as a technology. And what brought me to ZeroHash is that we are a crypto technology platform that makes it easy for any other company to make payments over blockchains, to offer, buy and sell and hold crypto assets for their users, and a whole bunch of things in between. So I'm looking forward to chatting about why blockchain payments matter and where we think the market is going.
Yeah, and especially since we operate and work and develop products and services within the same kind of realm, from RealTime Payroll on the Zebec side to crypto payments, as well as the point of sale terminals that we're getting close to bringing to the market. So there's a lot for us to cover ground-wise, but let's start from the beginning. Why developments in the blockchain are bringing us now to adoption of stablecoins, as well as why that matters in our field?
So blockchains matter because it's an upgrade to the database that is money around the world. Right now, still the vast majority of money and value moves on systems that were built in the 1970s. In the case of ACH in the US, payments are running between mainframe servers written in COBOL before the internet existed. And cross-border payments are largely done by kind of an email system known as SWIFT. And so blockchains are inherently global. They run on the internet and they help people and businesses move value around the world at the speed of the internet. And what that does for participants in the network is it gives them faster, cheaper, more secure ways to send and receive money around the world.
Let's cover adoption of stablecoins. And I think that is kind of a key and a core to your ability to service your clients, as well as our ability to service our clients, is the proliferation and adoption of stablecoins. So talk about that, please.
Yeah, stablecoins are one of the two killer apps in crypto today. And it's funny, only a few years ago, stablecoins were boring. People weren't really talking about it that much. It didn't really make sense why a cryptocurrency pegged to the dollar was important. But over the last few years, stablecoin volumes have approached and even started to exceed traditional payment rails. There's an infamous chart that Nick Carter published a couple of years ago that showed stablecoin volumes reaching near parity with Visa. And why they're becoming so useful is because it's way easier to move a dollar anywhere in the world on a blockchain than it is over ACH or card networks or SWIFT. And so why that matters and why that trend is continuing is just because I think technology progresses toward better solutions naturally. And, there is no specific consortium that's pushing people and businesses to use blockchains. They're just a better way to move money around. And while today, roughly 90% of stablecoins are settled for trading purposes, for algorithmic trading, for institutional trading in and out of other tokens, there are still billions of dollars that are moved in stablecoins every day for real world purposes. That's holding a dollar balance in countries whose local currencies are hyperinflating, like in Argentina and Turkey and Lebanon, to paying out vendors and employees and customers faster and cheaper than traditional payments. And then there are those who just prefer to hold their money in self-custody, where it's almost like the equivalent of holding a Swiss bank account in your phone, where you and only you have access to your money. And the only way to do that today is by holding stablecoins in a wallet.
I think you picked up on a couple of important points. First is the growth has been organic because there's a demand. And I think that there is a demand from both consumers and businesses. As you mentioned, not only is the transfer of money is quick, much faster, well, actually instantaneous, since we now live in a world of instant. So instantaneous, as well as it's significantly more economical and cheaper. And you got less layers and less intermediaries that are chipping away from the totals, right? So you definitely picked up on a couple really important points. So use cases. What use cases do you see with stablecoins being used for payments? And which are the ones that resonate with you or you guys see the most in your day-to-day business?
The ones that resonate most with ZeroHash that we're supporting today and working with others toward growing are for wallets and on-ramps who help users around the world hold a dollar balance. For us in the US, this is a problem that's solved because it's easy for us to open a bank account for the most part and hold a dollar balance just fine. But for people in Argentina and Nigeria and Lebanon and other countries whose local currencies are inflating their hard-earned income, holding a dollar balance is a way to preserve their wealth. And that's why tens of millions of people in Argentina, Mexico, Brazil, other countries are holding dollars. The demand for dollars is incredibly high. And the easiest, cheapest, and fastest way to do that is to hold stablecoins like USDC or Tether or PYUSD. So that's one. And that's a real world problem that stablecoins are solving for many millions of people around the world. The other is with cross-border payments. So I mentioned SWIFT as the traditional way to move money across borders. And SWIFT is fine, but it's slow, it's costly, and it's error prone because you have humans who are communicating with each other to send value between correspondent banks. Stablecoins over a blockchain don't require really any humans in the middle. It's just code that sends money from one wallet address to another. And you can move traditional payments over stablecoins by buying USDC in one country and selling USDC in another. And that greatly reduces the errors, the cost, and the latency of cross-border payments. So we just actually released a post on our LinkedIn page today about the cross-border payments market doubling over the next 7 years and the share of cross-border payments over blockchain rails using stablecoins increasing with it. So I'm really excited about both of those things. And the other, I would say, lesser known impact that stablecoins I think will have increasingly is with float capital. So in traditional finance, there are many cases where one or more parties needs to hold a float balance, either to credit customers or to handle the latency of traditional payments like ACH in order to disperse funds sooner than when the funds coming in arrive. And the traditional way to do that today is by holding a float balance in dollars and sending and receiving money in that float account via wire or ACH. And wires and ACH run on banking hours. So if your float capital goes down, but you need to send money out in non-banking hours, you can't really rebalance that float account with wires or a bank transfer until the bank's open. So if that balance goes to zero or goes negative over the weekend, you're kind of stuck. But USDC or Tether running on a blockchain 24/7, 365, a float balance held in stablecoins can be rebalanced at any time for much cheaper and instantly. And so I think more platforms that we're working with and more traditional payments companies are becoming aware of the value that stablecoins hold for this purpose. And so I'm bullish on that trend.
Yeah, you did mention the banking hours, right? It's not only instantaneous, but also 24/7 without bank holidays or weekends is what's important for further adoption as well. And then the key is the apps, right? When people realize that they can do all these things without having to think about what technology they're using and how it actually happens, as long as it happens when I want it on time, that's where a lot of energy is concentrating, right? Is coming up with that easy to use next level of tech, consumer facing tech that will create that moment, the iPhone moment for further broader adoption. One use case I want to bring up is something that's dear to us, the payroll applications and micropayments for hourly workers, for example, or for folks who don't need to wait or don't want to wait or don't have an option of waiting for 2 weeks cycle or a monthly cycle, as lots of places in the world do, and are able to receive the payroll or even are able to borrow against the upcoming paycheck. So these are the areas that we are working in with our WageLink app and now payroll companies, and ultimately moving to the real-time payroll that we've been able to service our Web3 clients.
Yeah, I think that's a really important application of stablecoins for those who need money the most. If you're able to support your clients to pay out their employees or contract workers, hourly workers by the hour, and you can't do that in a cost-efficient and timely way over traditional payment systems. So I'm very excited about that application that you're scaling, because it's very clearly useful for those who need money the most.
Yeah, and it's going back to the roots of the industry, like it's inclusiveness and it's economic freedoms and it's personal and sovereignty, so to say, right? As you mentioned, self-custody, as well as actually having access to the money you've earned by the second or by the minute or by the day. Talk about other trends or applications that you think are going to become key, and which are the ones, if any of the ZeroHash's current trends or clients you think are going to be driving the next wave of both business-to-business or consumer adoption.
I believe stablecoins will continue to grow at an accelerating clip for the reasons we've talked about, because we're still in early innings of these applications of payments being solved by stablecoins. I mentioned that stablecoins are one of the two killer apps in crypto today, and the other, I would say, equally important is Bitcoin. If the dollar is a hedge against local currency inflation, I and many others believe that Bitcoin is the ultimate hedge against dollar inflation. And, the promise of Bitcoin started from Satoshi Nakamoto's white paper as the ultimate peer-to-peer network of holding and transferring value. And I do believe that over the long term, Bitcoin will grow in massive proportions. We've been waiting for years for institutions to sort of wake up to Bitcoin and why it matters. The ETF launched earlier this year gives them access to buy and hold Bitcoin for themselves and on behalf of their customers. And we don't even have regulatory clarity yet. So I think once we get regulatory clarity in the US for financial institutions to custody Bitcoin, even for those to lend against Bitcoin, I'm someone who's looking to buy a home right now. And a lot of my savings over the long term are held in Bitcoin. And yet it's still hard to show assets in Bitcoin. It's still not taken seriously. It's still not integrated with systems. Once we get there, I think the adoption of Bitcoin grows tremendously.
Yeah, I hear you. I think Parth and I interviewed the Maple just a few days ago, and they're one of the pioneers in lending towards the mortgage of homes as well as one of their products. So yes, I against the digital assets holding. So you should talk to them. You might become one of their case studies.
I would also add that Bitcoin is involved in solving a really ambitious payments problem with the Lightning Network. And so the Lightning Network is only a few years old, but it has a very ambitious goal. The Lightning Network allows people to move Bitcoin between wallets basically for free and in real time. But companies like Lightspark, in partnership with ZeroHash and others, are growing the Lightning Network as a better way to move fiat currencies around the world. And many people don't think the Lightning Network is going to succeed, but I believe that it really will. And we're already seeing major players come online with the Lightning Network. And so if you think about right now, like nodes in the traditional payments ecosystem around the world, many are disconnected. You can't really send dollars via ACH to a Brazilian entity or person over Pix. But if you put the Lightning Network in the middle and use it as a conduit between payment networks all around the world, and you have nodes in that network that are compatible with local payment rails and local currencies, all of a sudden it becomes really easy to send and receive money to anyone, anywhere, anytime. And so Coinbase's 100 million users now have access to send and receive money over Lightning. Nubank just announced that they're going live with the Lightning Network for their 100 or so million users. And we see at ZeroHash many others who are excited about integrating the Lightning Network. And so while it's not just useful for moving Bitcoin, I am excited about the network growing to support moving value of any kind.
Yeah, I think the key for the broader adoption and bringing the billion users to the blockchain industry is interoperability, right? So that's where a lot of networks, including ours, focus. And again, the connection between the various rails, right? And those conversations are our views. They don't necessarily have to be the prevailing view. So I actually appreciate you being a contrarian on prediction on the Lightning applications for payments. But this is why it's so fun to have with our colleagues and peers. Anything else to add as we wrap up the interview? I appreciate your time, and we're coming to the end of our time here in the studios. I know we covered a lot of ground. You mentioned that regulatory clarity is important. There have been some positive developments here in Washington, D.C., and I think in some of the events we both attended here, we see that policymakers are engaged in the conversation dialogue and willing to work on some of this. Anything else at the end as we wrap up?
Yeah, what I'll leave on is optimism for the future of payments. We've made so much progress as an industry solving real world payments problems that we've covered today. And I do think the next step to make digital dollars on blockchains useful for everyday things is the kind of work that Zebec is doing. By building point of sale systems, by building cards and wallets that everyday people can use like a traditional bank account or like a traditional debit card, that problem is largely unsolved, and it's going to take leaders like Zebec and other payments companies to bring us to the last mile of stablecoin payments. And that's happening right now. Another example is with our partner Stripe, who announced their Pay with Stablecoins product at checkout. If you think about once stablecoins become as useful and as easy to use as typical dollars, I think the growth takes off tremendously. And the benefit for merchants around the world is really game-changing.
Absolutely. Cannot be more true. And again, the dominance of the dollar in the world economy is important, and stablecoin is able to preserve that.
Absolutely. Well, thank you, Elena, for having
very much.
this conversation.
Much fun.